Good morning, everybody. Welcome to the Flow Show, Tuesday, the 14th of January. Here we go again. Let's see what's going on in markets. Morning, Kay. How you doing?
Morning, Ryan. Morning, everybody. Yep, doing all right, mate. Yeah, market's not standing still right now, so it's all going to build up nicely into inflation data and the inauguration next week. It's going to be funky, I think.
Yeah, definitely. Right, well, let's get stuck in because there's not an awful lot of headlines through yesterday, but a few bits and pieces to discuss. Over in Japan, we've had Deputy Governor of the Bank of Japan, Himino, waffling overnight, saying that inflation expectation has risen from below 1% to around 1.5%. Says the BOJ aims to achieve the price stability target of 2% in a sustainable and stable manner, but says if these inflation expectations do not rise towards 2%, the actual inflation rate will eventually fall below 2%. And it would therefore not be possible to achieve the target in a sustainable and stable manner. So far, developments in prices and inflation expectations seem to have been largely on path. If this outlook would continue to be realised, the BOJ will raise rates accordingly and adjust the degree of monetary easing. He says the decision on a hike depends on the info available by the January meeting. But based on his comments about those inflation expectations, that he wants them at least at 2%, because as we've been talking about, expectations for inflation can become a self-fulfilling prophecy. If they're around 1%, they're not there yet for his checkbox to go for a hike in January. Kay, is this him basically ruling out a hike, even though saying that they might still hike?
Yeah, we're trading percentages here, right? And
Hello?
If you just, I mean, yeah, I'm sorry, mate. I have still a bit of issues. My microphone seems to go on and off. I need to get it checked. Yeah, the percentages look to be like coming off a little bit. UEDA looks to be one of the more hawkish guys over there right now, because the other ones are relatively cautious still. And if he's on his own next week to hike, but, oh no, there's another one, right? There's another hawk in there. But if only there are two of the 5 or 6 or 7 who are there, it's not going to happen, of course.
Yeah, I think, well, we say UEDA's one of the most hawkish, but then he gets to a meeting and he just goes the other way and he's sticks to the cautionary line. But
yeah, so don't
I think,
listen. Yeah, don't listen to what I say. Just watch what I'm doing. Then
yeah,
in that case, it's probably going to be a no-go next week. But I won't rule it out. We can't completely rule it out. But it's quite funny that he says, Himino says that we are around, or they are around 1.5%. That's where the base or headline numbers are coming out well above there.
yeah, exactly. But he obviously wants to see a bit more. And I get it. If you get inflation expectations from the population of at or above 2%, then that's, as I say, that is a bit of a tick box for them to hike. I don't know. I think if we get a load of sources again saying that they're going to hike, and we see the yen strengthening, I think I might think about a little fade of that going into the meeting, because even if they do then hike, there's still the risk of how big a hike it is, and if it's a small one, then you're going to see yen weakening again anyway. So yeah, I think we're potentially setting up for another December type situation.
I agree, Ryan. We just have to look at the way dollar yen comes back all the time, despite the rest of the dollars having or wanting to correct a bit. It's still is still coming back relatively easily. Where we were thinking or hoping, whatever, to get like 155s or 54s, it's not happening. Around 157, there seems to be enough bids in this market right now. So yeah, it's the bids are coming in earlier and by the day, it seems. Yeah.
Yeah, exactly. Obviously helped by the US side of things as well. So it's not just all about the yen side. Right, let's move on to the clowns at the ECB. Ollie Rehn sees interest rates at neutral levels by mid-2025. ECB's Holtzman hopes to meet the 2% inflation target by year end. However, he says the outcome of the next policy meeting is unclear, given that they are expecting to continue cutting. He is one of the big hawks at the ECB. That is, and he's been on board with cuts so far. That is a bit of a comment to put the cat amongst the pigeons ahead of the next meeting, Kay.
Yeah. Do they agree on anything, or do they know anything? That's that's the real question over there. I think they're all a bit lost, you know. And if we go back to what Lagarde was saying at the end of last year, a couple of times, in her mind, I think she really wants to wait to see what's going to happen with Trump and make a decision, and all the rest could be just rhetoric and just a bit of loose words right here and now.
Yeah, could be right. Anyway, here's a very bullish comment from the head of France's central bank, Villeroy. He says French economic growth could pick up in 2026 or 2027. We're 13 days into 2025, and he's got zero comment about growth this year. I'm taking that he's writing off growth for this year for France in 2025, and is hardly certain about 2026 and 2027. We were talking yesterday, and Blake asked on the Face show as well, you know, what reasons are there for buying the euro? Well, that's a comment that's a reason not to buy the euro. In fact, it's probably a reason to keep selling the euro. If you can't talk about growth this year, 13 days in, you know you're in trouble. Bank of England, Citi have changed their forecasts. They now expect the bank to deliver, the BOE to deliver consecutive interest rate cuts from August 2025, August this year. Their prior forecast was of May, so they've pumped that down a few months. Obviously, give or take the data this week, that'll probably change by Friday. We shall see. Over in the US, we've had the New York Fed out with even more inflation expectation numbers, following what we've seen from the Michigan survey last week. 1 year inflation expectations came in unchanged at 3%. 3 year increased to 3% from 2.6%, so 4 pips up for the medium term horizon. But they did fall in the longer term 5 year horizon to 2.7 from 2.9%. So sticky on the short term, higher on the medium term, slightly lower on the longer term. I also looked at this survey and regarding the jobs market, and the mean perceived probability of someone losing their job in the next 12 months declined 1.6 points. The mean probability of leaving one's job voluntarily in the next 12 months also declined, and it went down by 2 points. Both those readings the lowest since January. What that infers is that although people don't see higher chances of them losing their job, they also don't see a higher chance of them looking to change their job either. Okay, so that just a little bit of tepidness for job prospects. You know, we saw, particularly over the last year, 18 months, if you're looking at the JOLTS report, there was a good lot of anticipation that you could trade up your job, get a better job, move up the ladder sort of thing. but that's now easing off just a tiny bit. Doesn't mean the jobs market's on its way down, but just means we could just see a continuation of what we have been seeing, just a bit of easing, people just sticking in a job rather than looking to change up a bit more. Over in the UK, Rachel Reeves, the Chancellor, has been given the dreaded vote of confidence by PM Starmer, saying she's doing a fantastic job and has his full confidence. In football manager terms, that usually means they get outed a week later. We've had another Trump tariff story out overnight, this time from Bloomberg, saying that Trump's team is going to be looking at month-by-month tariff hikes of 2 to 5% when they're talking about this emergency, or whatever they call it, bill enactment to push through tariffs. They're looking at 2 to 5%, saying that Trump still hasn't reviewed or approved the gradual tariff idea. But it's Besant Hassett and Miran discussing these gradual tariffs. So that's a little bit less than the threats we've heard previously. It's been interesting that story was out last night, and Trump has been on his Truth Social platform since then, but has made no mention of that story. Like he did with the WAPO story last week. He's been waffling on about a ton of other crap. That's not to say he might not pop up if he decides that that's all horseshit and he wants to make it known it's all horseshit. He may do so today. So that's another sources piece that we have to keep an eye on. If it's true, as I say, it means it's less inflammatory tariff news than what we were expecting previously. That's it. All I've got. Yeah, go on, Kay.
Yeah, and I think it's a lot of there's a lot of reporter fishing now for reactions, and that trying to then make a story, the I told you so stories to pop up next week. Yeah, you see, I told you this and I told you that. I mean, I think there's a lot of fishing because they know that Trump is fast to react. I'm still of the opinion that we can't rule out anything right now. He can sit down and out of a vengeance against those just against the press. I mean, slap tariffs on everybody, absolutely everybody, as soon as he sits down. But as I said, we can't rule out anything. But I mean, strategically, I don't think it would be very clever to start putting 20-25% tariffs on everybody straight away from day one, in the hit first and then ask if it hurts. I tend to agree that we may have a lot of how shall I say, threaten to slap tariffs, but perhaps give some countries at least the opportunity to then come over the bridge with some deals also. And I'm thinking about Europe and UK, for instance. I don't think that it's going to be tariffs from day one, but as I said, we have to keep everything open.
Yeah, I think that the bar's been set, particularly last week with that WAPO story and then the denial. We know that Trump's been talking big on tariffs since the election, since the campaigning through last year into this year. That it's a stick he's waving. So I think any of these types of stories that dumb that down a bit, dial it down a bit, he's going to come back against, because he may go 2 to 5% in reality, but he doesn't want to give up that threat this early.
No.
So I think that's the way you got to see it. We have what he wants to do and what he says he's going to do now, and then we have what he actually does when he's in the hot seat, which is still not for another 6 days. So take it with that theme in mind. He may come out and knock that story back a bit, or he may not. But either way, you know where he is now. You need to know where he is in 6 days' time.
And the market will react to whatever he does.
Exactly. So we shall see. I still maintain it that he's waving his big stick about to get people to the negotiating table, and that'll be the outcome.
It's already succeeded in a way, huh?
Yeah,
He's
exactly.
already succeeded there. I mean, Rutte went over there. Trudeau, even if he's out, he sending teams over there. Yeah, I mean, the Europeans, the UK is probably already talking to them as well. So the thing is the people he surrounded himself with, they are quite hawkish. So that still is that big stick. Maybe even more even so than himself. Is the big stick is the people he surrounded himself with, and because they are real hawks.
Yeah, exactly. 6 days to go. Can't wait. We'll see what comes out of it in reality. Right, that's it on the old headline front. Unless you've got anything else, Kay?
Zippity doo, go ahead.
Yeah, no worries. It's been a bit of a quiet one, as I say, yesterday on that front. Right, well, we're on dollar yen, so we might as well have a quick look at that. Yeah, 157 has been holding up. We know it's a big old level. Yes, we've had previous blows through extensions or whatever. That's still the volatility in play. But while things are largely quiet-ish, then this 157 is still holding. We're now knocking up towards 158s again. Unless we're breaking up above 158, 40, 50 and holding it, then we may just be going to see a bit more of this range going on. Obviously, looking at dollar yen, got to keep an eye on them yields, which have had a little bit of an easing off the highs in a lot of the yields, tens especially. We've had a little old gap down in those yields there coming into today. So we're off from the highs at 480, not too far though, and we've already bounced up off the lows down 475s. So yeah, we're still moving along there. We're still not ready to give it all back, and you're going to see the swings happening there too. Over in the UK, similar situation. Tens are still holding up. Let me have a quick look at the old 30s because they're the ones causing all the bother. Again, bit of a pullback, but they're not coming down too far or too fast. And so expect the pound to remain wobbly while that's going on. Speaking of the pound, it was looking pretty good. We saw, as I said, those yields coming off US, UK. We did see a rally off of that big old 121 level I've been pointing out for quite some time. Nearly got up 122.50s before a pullback. Then we had another go this morning, couldn't get through there. So that set the mood for where the top side resistance is, which comes in just shy of a level at 122.60s. We have pulled back under 122 now. So we're not out the woods yet. And as I pointed out this morning, that was a decent old rally, 100, near enough for pretty much 150 pips, a decent rally, but it's nothing in the grand scheme of things. It's a minor pullback, given what we've seen since the 134s. So it's not out the woods yet. It doesn't even look to change tone unless we're getting back above some of these fib levels. And the 38.2 fib just of this dip here, this short-term move from December, is still way above 123. So this is just a little pullback at the moment, a minor correction. I can't rule out that we have another move down to 121 and even go through it. But if we get down maybe 121.40s, 20s, 30s, something like that, and we find a bit of support there, that'll be a step up. Maybe that'll give it a bit of a springboard to have a look a little bit higher. But if we come back down to this 121 level pretty quickly, maybe today, that won't look good at all. That will look very similar to a lot of the other patterns we've seen previously when we've had support. But it's a big level. As I said, it's one of the big levels that if you're going to go from, if I'm going to look somewhere to maybe start catching a knife, that's where I'm going to be looking. 121s down to 120s. One of those big old historical areas that we get lots of action around here, going back and back and back. So we've held a first test. Maybe we'll see if we get a second test and see if it holds it again. Euro sterling as well. That's back up, testing the zone. Had a little knock through, but we're back in it. this is, again, it's not moving because all of a sudden everything's great in Europe. This is really based on this pullback in cable. It's down now, 70, 80 pips off the highs pretty quickly, while euro dollar's not doing an awful lot. So this is still all about the underperformance of the pound rather than, as I say, euro doing well. Get through here, we have got another level around 30, bit of a minor level, just form a traffic area. Otherwise, it's 84 from this high, just around 45 up to 60s. That's the next area for me. I'm not really in the mood, interested in trading this one at the moment. I still don't want to buy it from the euro side, and I'm also a bit reluctant because we've come a bit of a long way in the pound already. But if we get up to some really juicy levels, say up towards this 85 area, I might be interested in fading it from the euro side of things anyway. But I'm not really got an interest in it right here and now. One of the other ones, yeah, go on, mate.
Yeah, I tend to agree on that sterling. I don't see too much of a reason to really start buying euro sterling. We had this big reaction, negative reaction on the sterling, and we know how the market can be on sterling. It can really drive it relatively fast to places. But yeah, I don't think that euro sterling is looking at the euro exactly. Exactly looking at the euro. I'm not sure that this is all over yet. But of course, I mean, Trump is going to have a part of the clue as well. I mean, if he's a bit softer against the UK or against the euro versus the other one, you could see pretty fierce moves in this pair as well.
Yeah, exactly. And this is the point. If you're trading euro sterling, you've got to know how it's moving. As I said, cable, it's done pretty much 150 pips off the low. Euro dollar, what do we get down to? 78. It's done around about 80 pips. Okay, and even then, we've had a bit of a pullback in the euro. It's pulled back from 77 level down to 50, so it's pulled back 20 pips. Meanwhile, cable's pulled back 70, 80 pips. So that's why you've got the speed movement. And euro, this again, it's a very weak bounce. This was my zone up here, 58 to 70s, 77s. We've got there. We've held it twice now. Okay, this is a very, very weak bounce off this lows. If we come back down here pretty quickly and we get under 102 again, then I think we're probably going to be heading lower. And in that case, we might see yet again another step down of the levels. I was mentioning it last week and yesterday. We keep seeing these resistance levels stepping down, stepping down, stepping down. Well, for now, it looks like we've got another step down to this 102.70s area. If we get under that 102, I reckon we're going to start seeing 102 become resistance, another step down, and then maybe we're heading down towards parity, that sort of area. But back to euro sterling, yeah, this is moving slower than cable's moving, and that's why euro sterling's moving. Right, I was looking at Aussie Kiwi because I'm still a bit short in this one. Happy to stay short for now. I've been talking last week about this uptrend that we've got. We ran into a bit of trouble up at 111. We couldn't then go on from the dips and make new highs, so we couldn't keep it going. So it's the first sort of warning sign that maybe this move is coming to an end, or at least going to stall for a bit. We have pulled back to the old 102.20s area, 15.20. We've held that on the first test. For me, in my position, I want to see it under here. I want to see it under this low, 110. If we get under there, then it's potentially breaking this trend that we've seen and could then be heading back lower. But again, I'm not really expecting much from this one at the moment. This one is, again, a bit more of a speed mode. Kiwi's gone faster than the Aussie versus the dollar, and that's why we're seeing this move. So it's not a fundamental macro-driven move. It's more of a speed move that I'm keeping an eye on. Kay, I'm going to ping it over to you, mate.
There is one thing we haven't mentioned today, is that there's plenty of rumors out of the Middle East that they may be close to a hostage deal, right?
Yeah.
I guess it has in parts to do with this risk rebound that we saw. Perhaps also a bit underpinning euro, because as we were discussing already a good number of times, euro should uh, benefit perhaps a bit.
Oh, you've got to get, mate.
I mean, I don't know what's happening, guys. Am I back?
Yeah, yeah.
Yeah, I don't know. I've changed my settings and yet it won't let me stay on there. Sorry about it. Yeah, so I think it may also, because if you alleviate some risk in markets, it may also underpin the euro somewhere, euro dollars wise. But yeah, for the rest, still not positive on the euro. But
I'm a bit cynical on this hostage
yeah,
stuff. Yeah, obviously it's good news. We've been here before. It seems like Bidden wants to sort of leave a bit of a legacy as he gets
yeah,
out the door,
correct.
uh, getting the deal done. But yeah, if it's good, it's good. No, you've gone again, mate.
Yeah, yeah. Am I on? It's
Yeah,
just happening. I don't know. I need to check my Zoom settings. I'm sorry about it.
that's all
I
right.
was
I
just
won't do it.
Yeah, I was just looking at the S&P, and I'm going to try to get everything set relatively quickly. We went back to a few levels here. I haven't looked at it for very much of late, but I am looking at this zone here, somewhere in the 56s. That looks to be a bit important, because if we would somewhere, and it may have to wait until Trump's inauguration or so. But if we break below here, that could set in a bigger correction. But for as long as it doesn't, this just looks like a relatively shallow correction, and it could be that we are forming a new kind of channel here with support around where we stopped yesterday. That is what we need to look at now, somewhere in that 5760 zone on the S&P. So keep an eye on that level, because it could be the key to what happens next. Okay, for as long as it holds, I think you look at the longer term, absolutely nothing is changing. Even if you look at the real longer term, that nothing is really changing, and unless we go below 5300 somewhere around there. But even so, I mean, on the shorter term, it may be that we need to monitor those levels where we stopped yesterday. See what I mean around here? That's maybe already an interesting watch. Okay, I was just noticing that this morning. So yesterday I said, like, be careful. What happens here? We could be in for a bit of a fakey. That seems to be the case, but we are not really going anywhere fast to the downside. We still, and I think even if we hold inside the triangle, with the low end now being somewhere in the low 26s on gold, is still going to look positive. But of course, this one, and I'm not going to add or do much with my positions right now. This one I'm going to wait for Trump's inauguration now, because I do think that this one is going to be a pretty big mover once we know what Trump wants to do. And then, for instance, if he goes softer than what may be expected, looking at the people surrounding him, this could be in for a deeper correction. Okay, but for as long as we don't have the inauguration, we don't know. It's don't change much here. If in turn he goes pretty hard on tariffs, or hard on threatening, even this one is probably going to go back for the all-time highs. For a starter, I say it could still be the instrument of 2025, in my opinion. But we need to know what Trump is going to do with it. Silver, as I said, really not convincing at all, and that's what happened. Failure. again. I'm going to take the box out because we are just going up and down, and it's really watering down. I think we need to look at a bit wider levels, like for instance 28 3/4 and then 30 and a half, 30 3/4 to the top side. Just those two bucks here, that seems like to be a reasonable range now that we are looking at. Yeah, Swissy. Let me. So yesterday I was saying like be careful of this zone. We haven't reached it because we saw a rebound in well, bit of a correction in the dollars led by the cable, then followed with the euro dollar. Other dollars as well. We can note also that Kiwi is doing better. Aussie also doing better, but failing around the 62 zone. So this one also a bit of a setback, but I don't see much right now, unless we start to break back, and this is a bit far away right now. So let me try to. Yeah, I mean it's there's not a lot to say there is there on dollar Swiss right now. Even not 91 and a half. We are turning just above there. It's your first little zone there, 35.50. Okay, is your little zone there? It held in the morning or overnight. That's about what I can say. I mean, danger zone would be if we start to get back down into the 90s, but we are like a percent and a half away from the danger zone. Top side still over there. And the thing is, with also US CPI coming out, or the PPI today, I think CPI is always a bit more important than PPI, but also with inflation data coming out, inauguration next week, what do you do? If risk is doing fine, Swiss pair should be underpinned. That is Swiss continuing to trade a little bit on the weaker side. What was interesting though is that test that we saw here of the 93, 35, 45 zone and held. That is perhaps a more interesting one as well, which is testifying, and I always use the Euro Swiss as the barometer because
You've gone, mate.
yeah, I know, I know, and it's again, and I think I'm back. Every time
Yeah,
it,
you are.
it tells me to check my audio devices, but yeah. Okay, I'm gonna leave this one open. So yeah, as I was saying, I think Euro Swiss is really your barometer. If Euro Swiss is doing okay, the rest of the Swiss pairs, Swiss will be trading a little bit on the weak side as well. So this is one to look at. And I am about through with it. The only thing I'm gonna note here is that I was looking at, but I didn't take the position. But this we seem to have a break here on the Euro Kiwi. Had a bit of a channel here, or a bit of a flag here, and it's broken, and we are trading lower. So any rebound to 183 and a half is going to raise my antennas on the Euro Kiwi. I think Euro Aussie can go the same way. Euro CAD perhaps as well, but Euro Aussie trying to do the same thing here, trying to break down. 166 is going to be a bit of a level, 66 figure 20 or so, bit of a level here on the Euro Aussie. And the reason why I noted those is that despite the equity markets coming off a lot while I was off, those crosses did not make too much of a headway. Normally, if you look at risk, if you trade risk off, the antipodians would suffer a little bit, but nothing of the like happens. So there is a bit of a chance, I think, that both Euro Aussie, Euro Kiwi are looking a little bit down for the time being, just as a thought. And with that, Ryan, back over to you.
Thank you very much, mate. Yeah, good stuff as always. Hope you get that old mic issue fixed. We can have a chat about that if afterwards if you want. Right, we'll call that a day for today, nice and early. We have got PPI coming up, bit of a change around. Usually it's CPI first, then PPI, but it's PPI today. PPI expected to come in a bit higher, so that might set the tone a bit for the CPI data. So keep an eye on that one later. join us on Face. We'll be covering that live, of course. Otherwise, have a great day, everybody, and we'll see you all bright and breezy tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.